Hey everyone, and thanks for jumping back into the cryptoverse. Before I get started, I just want to make sure you guys can hear me. So if you guys can hear me, let me know in the chat. I have had some issues recently with people with the microphone not working. All right, sounds good. So let's go ahead and get started. So, we've been making a lot of videos recently. We primarily talk about Bitcoin, Ethereum, Chainlink, and Cardano. So those are the ones we're primarily going to be covering in this video. We will take a look at XTZ. I also want to remind you guys that if you do have any questions, please let me know in the YouTube chat, and I will try to get to those. And if I miss the question, then just re-ask it, because it's kind of hard sometimes for me to keep up with the chat on YouTube. But what I want to talk about here is, there's a few things going on in the market, and I just want to, kind of relay my thoughts to you guys, and then try to hear directly from you guys to, just hear what you guys want to see in the future, questions you may have about things that I've previously talked about, and, just the general direction of the channel. So, what was it? Tammy just says, let's go straight to Cardano. All right, you know what? We'll just go straight to Cardano. All right, let's look at ADA. So what's ADA doing? And by the way, if you guys do have questions, leave them in the chat. ADA has obviously formed this nice symmetrical pattern that we're, playing out before our eyes. This was the bottom that I think many of you guys were accumulating in this region. And again, this is Cardano versus Bitcoin, which I think is more important than versus USD. And the reason I say that is it's not a knock against ADA. It's just the idea that we all want to make money, right? It's, this is the purpose, right? I mean, this is not financial advice, but the purpose of my channel is, to relay my thoughts to you guys. And my purpose in being in these markets is not, as I've mentioned, it's not some altruistic thing that I want everyone in the world to use blockchain. I think that'd be cool, but I would much rather make money along the way. So, the point of covering these is to say, I think ADA has some good technology. I think for me, they're my primary hedge against Ethereum. I do own more Ethereum. That's just a fact. I own a significant more of Ethereum, mainly because Ethereum has a huge head start in terms of, say, development. But I mean, ADA has things going for it as well. I mean, they instead of launching and then later having to worry about the transition to proof of stake, they're just they're waiting to that point before they really launch and everything gets going. So, as I've said before, Cardano had no business being worth $1 back in the last bull market, but I think it will have its business being worth $1 and beyond over the next several years. And this, I think, is a good coin, as far as I'm concerned, to hold. And what I'm ultimately looking for is, to see which way this is going to break, because if we continue kind of what we did last time, we may see the valuation go up, back up to 1,857. This is with respect to Bitcoin sats. Currently, we're in the 1,300 range. One of the nice things, though, is that, there have been a lot of coins that have pumped recently. I mean, they're everywhere. And a lot of them have seen very significant retracements. But ADA, on the other hand, has actually, it's been more or less holding its own. It hasn't really retraced a whole lot. And in fact, if you look at the monthly time frame, I mean, it's a really nice chart to look at, just to say, we came here, we identified what was going on, we said that this is the time to be buying ADA for this bull market, this is the time. And I even said back over here when we were, when Bitcoin, or when the valuation was this low and ADA was only, say, 2 or 3 cents, 4 cents, we said, okay, well, it makes sense to buy up to at least 10 cents. I mean, no, this is the Bitcoin chart, but it makes sense to buy up to 10 cents. After that, it's becoming a little iffy. And that's not to say, that it won't go higher. I think it'll go a lot higher. It's just, you get to one of those saturation points in terms of what risk you want to take on, and you have to say, okay, well, I've accumulated a lot at 2, 3 cents, 4 cents. Do I really want to keep buying it at 12 cents? It becomes riskier in the short term, especially if Bitcoin decides to drop back down to the 200-week moving average. But in terms of monthly candles, I mean, this looks really impressive to me, as far as you know, a simple hedge against Ethereum. So certainly ADA is one that we'll be looking at. So we looked at ADA. What else do we have going on? Hello from Canada. So let's talk about Ethereum, Bitcoin. Let's see. So, well, I mean, I guess this is the Ethereum USD chart. We actually just put out a video yesterday on Ethereum, you know, versus Bitcoin versus the US dollar. We talked a lot about it. I would encourage you guys to go check that video out, because instead of just being, say, a live stream, I actually do have a lot of charts that I systematically go through. So, you know, we've talked a lot about Ethereum. It currently is right around its fair valuation point. If you look at, say, the daily time frame, and let's zoom out a little bit, you know, you can see that the Ethereum value is right around its fair valuation. And then the fair valuation, according to this logarithmic regression band, is around $235. Okay, and basically noting that when we pop above this band, we're starting to get into, you know, shorter term, maybe some speculative bubble territory, which at the current level is around $333. So, you know, so as far as Ethereum, you know, as far as, say, Ethereum USD, I still think we are in general accumulation mode. I know a lot of people have gotten excited about the 4% move since I last spoke about Ethereum. Guys, you know, 4% is nice, right? But I mean, you hardly even get out of bed for 4%. You know, the move that we're waiting for Ethereum is not a move from 238 to 245. You know, it's from 245 to, you know, 400. You know, this is ultimately the move we want to see. You know, a 4% move is nice and all, but again, it's, you know, we still have a long ways to go in terms of Ethereum. And note too that, I mean, a lot of coins have been, you know, have been doing, you know, significantly more, but you have to be careful with those, because a lot of them, they can go up really quickly and then they can come down just as quickly. Ethereum is one of those, you know, bigger indexes in the market. So Ethereum is one of those ones. It's gonna take more than a Reddit shill or a YouTube mention to move a coin like Ethereum. It's gonna take a movement of the market. So this is, you know, with Ethereum, again, 4% is nice. 4% is not why we are here, though. So of course we're going to talk about Ethereum. Let me try to pull up the Ethereum Bitcoin chart, because I do tend to like looking at the Bitcoin valuation more. So let me go ahead and pull that up. Leave any questions you guys may have in the comment section there. So let's pull this up. All right, and I'm gonna move it over here. Okay, so this is the Ethereum Bitcoin chart. You know, one of the things we have spoken about, and again, we could debate its relevance all day long, but it's that 20-month moving average. And I know that this chart I happen to pull up with Binance, so it doesn't go all the way back. But historically speaking, this 20-month was the support region here and here. And now it does seem to be, it acted like a resistance level for 5 months, and we've recently broken through it. Now, the question, right, is is this kind of the preamble to the Ethereum Bitcoin ratio kind of going to, say, that next level? Because, you know, this is ultimately what we want to see, right? I mean, we made this video yesterday. You guys can go check it out. But this is what we want to, you know, we want to see a breakout, like one of these breakouts. Now, we have talked about significantly, we talked about, you know, diminishing returns, lengthening cycles. You know, our accumulation phases are going to get longer as we continue to march through the cycle. But, you know, you have to remember that these types of moves, you know, it could go very slowly for a while, and we might not see a significant jump for a few weeks. We could see it tomorrow for all I know. But the point is that, you know, no one really knows, right, when it's going to happen, and anyone who claims to is, I just feel like is lying through their teeth. We look at the data, we say, you know what, Bitcoin's doing well, it's above the 20 week, it's above the 50 week, we can look at historical data, recognize that this is what helped trigger Ethereum to start moving. This was one of the key indicators, the other key indicator being Bitcoin getting to its previous all-time high. So what we're waiting for is Ethereum to make a significant move against Bitcoin. And what that might look like, and we talked about this in the video yesterday, is noting that, say, our cooldown phase became our accumulation phase in the next cycle. So cooldown became the accumulation here, this cooldown became the accumulation here, and note that these are sub-cycles of a whole Bitcoin market cycle right here. So perhaps that this cooldown period here will be the accumulation range, say throughout maybe late 2020 or 2021. And maybe that would be preceded by a shorter term speculative bubble that goes up a bit higher and then retraces down to the to the 0.03, 0.04 range. So this is ultimately what we're looking for with respect to Ethereum, because we know, right, that, you know, when Bitcoin is doing well, then the price of Ethereum does tend to do well. So we're just ultimately waiting for that move. When it happens is obviously is anyone's guess, but I think not holding Ethereum is a pretty big risk. I'm gonna take a break for a second and look at some of the comments to see what you guys have. So someone said, do you plan on doing a video on portfolio allocation percentage for Bitcoin, Ethereum, Link, and ADA using modern portfolio theory? Yeah, I'm probably going to do this, but I'm going to have to use, say, price data from only maybe like 2019 and forward. Maybe I could go back as far as 2018, but the issue is that in order to not compromise the validity of the covariance matrix when calculating your risk-adjusted returns, you have to use similar timeframes for each coin. So I can't go back and use historical data for Bitcoin back from, say, 2010 to come up with your risk-adjusted returns or the portfolio that maximizes the Sharpe ratio on the efficient frontier using Ethereum data from 2015 when ADA and Link were not even around at that time. So I could do it, but it would be with the caveat that it's only taking into account data from whenever we have data, you know, for each coin. So theoretically, it could be from the end of 2017 because both Link and ADA saw the tail end of that bull market. But I might also just do it from, say, 2019 because, I mean, 2018 was a pretty brutal bear market. And again, as I said, ADA had no business being that highly valued. I may be taking it from, say, January 1st, 2019 and just taking it to present day and then looking at our risk-adjusted returns for Bitcoin, Ethereum, Chainlink, and Cardano would be the way to go. The way to go. And I do sometimes make them an acronym and just call it BELA: Bitcoin, Ethereum, Link, and ADA. So someone said, do you think the hard fork might push the price to 16 cents or 20 cents? You know, guys, I mean, in terms of, you know, we've spoken about this before. If you look at the ADA Bitcoin chart, you know, assuming that the price of Bitcoin doesn't change a whole lot and ADA makes a move up to this level around, you know, 1800, 1900 or so, then I think the valuation at that point would be around 17 cents, okay? And around 17 cents, the risk on ADA is starting to get pretty high. It could happen. It very well could happen. I don't know how sustainable this is in the short term if we just continue just pumping up with respect to Bitcoin. So you have to be careful, and this is why I always say, you know, it's useful to take profits because no one knows what's going to happen. But the nice thing about taking profits is that your overall portfolio continues to go up. So you have this allocation of coins. Some of them go parabolic. When they go parabolic, you take that risk out of some of those coins, not all of it. You can dynamically DCA it. You take it out of some of those coins, reduce your idiosyncratic risk on that asset, and then move it into, say, more of the, you know, spread it around, maybe say Bitcoin, Ethereum, other coins, you know, if you're holding other coins. This is the general idea. And the same thing goes reverse. You know, if ADA were to reverse back down, then it could leave you, say, like a nice entry back into ADA if you never actually picked any up. Yeah, someone said, what about using projected expected returns as well? Yeah, I mean, I could do that. I mean, the issue, right, is what do you put in for a projected return? For Bitcoin, you know, I think it would make sense to put in around 100K. For Ethereum, maybe 5K. I mean, I know these sound insane, but once upon a time, a $200 Ethereum was insane, or you know, and it went even up to $1,400. So I know it sounds crazy, but remember, if those are your projected returns, it's not like Ethereum would go to 5K or 8K or something and stay there. It would likely go there for a moment in time, and then you know, come back down to whatever the new normal is. So you have to keep that in mind. Okay, so in terms of, you know, again, in terms of looking at Ethereum, we're still in the regression band. It's just business as usual, right? There's nothing really new going on with Ethereum until we really start to make a move here. A 4% gain, while exciting, it's not what we're here for. So just keep that in mind. I would like to remind you guys that we do have a Telegram channel, and you know, if you like the live streams, but you really want to see, you know, you want more discussion, please check out the Telegram channel, and I'll put it there in the comments there, so you can see it if you guys want to join that. By the way, someone asked about the premium list. I mean, you guys know about it. If you guys want to join it, you can check it out. You know, it's just intothecryptoverse.com. I'll put that in the comment section as well. But we do have a decent number of people on it, and you get a lot of this analysis. There is a private Telegram alerts channel where I tell you guys what I'm doing, so you know what I'm doing, and you don't have to like guess. But I'll tell you what I'm doing, and you know, that's something that I've got a lot of positive feedback on. And then of course you get weekly premium videos, weekly newsletters, and a risk dashboard. So a lot of people like the risk dashboard because it gives you access to all the risk metrics in real time. And I can tell you, you know, having that that risk dashboard is really helpful, because when coins make these parabolic moves, it kind of becomes somewhat arbitrary, right? You say, okay, is it going to go to 17 cents? Is it going to go to 24 cents? Or is Ethereum going to go to 330 or 350? By just sticking to the math, it completely removes all the noise. And the nice thing about the risk metric is it does not only take into account the current price. It doesn't just say, okay, well, the price went up today, therefore the risk is a lot higher. No, it looks at a lot more than that, and so it gives you, say, more of a non-intuitive way of measuring the risk that you might not ordinarily consider. But then the more you think about it, the more it actually does make sense if you go back and look, okay, we are making a significant move compared to past volatility, therefore maybe you should start dynamically DCAing your profits. And this is exactly what I showed on the private, you know, on that private Telegram channel with Link. I mean, if you're talking about Link, guys, Link is one of my favorite coins to hold, and the reason, right, is because it is not highly correlated to Bitcoin. Okay, so going back to modern portfolio theory, you know, if it's not highly correlated, right, it improves your covariance matrix because the correlations between Link and Bitcoin are low, and therefore it improves your risk-adjusted returns. So the idea is holding Link is a good hedge when, say, the market of crypto isn't just moving that much. But when Link makes a nice move, right, you know, you can see it made this nice move. You know, it's important to DCA some of those profits back out into say Ethereum or Bitcoin. I mean, I told people what I was doing, but the thing is, you know, and I apologize to any Link Marines that would consider it, you know, just blasphemy to ever sell it. But I mean, the data of Link with respect to Bitcoin suggests that it just goes through the same cycle over and over and over. And the risk levels with respect to Bitcoin hit a certain level, and then they almost always retrace back to the prior levels, okay? And then they start again. So this is why I think it's important, and things like Link, I think Link is one of those coins that it's too risky not to hold it for the bull market, because if you think about risk, I think a lot of people think about risk only in like what is the risk to holding it, because like, okay, well, if you hold Link and then it goes to zero, well then okay, there's a risk associated with that. But if your goal is to keep up with the market, if people are seeing these incredible returns on Link and you're not, I feel like there's a risk associated with that. And that's the idea of, okay, it does improve your risk adjusted returns just based on historical data, historical volatility, and modern portfolio theory. I mean, it improves the efficient frontier. So with that in mind, if it improves the efficient frontier and you could just add on a little bit more of Link to your portfolio, it seems like a good holding to me personally. And this is why I just, if it gets to a certain level, I buy it. If it gets to another level, I sell it. And I just, again, dynamically DC. I don't sell all of it. I don't go and say, okay, I'm just all in or all out. This is completely ridiculous, because there's always a chance, right, that despite this is the trend, there's always a chance that it just continues going up, right? Just like there's a good chance that it comes back down before making another move. Okay, no one knows what it's going to do. And this is why you just sell more and more at each risk level, and then eventually it will retrace at some point, and the goal is to offset your risk, your idiosyncratic risk in any individual coin, and put it back into your crypto index, which might be filled with, say, Bitcoin, Ethereum, maybe you have 20 other coins you hold, but this way you can more effectively track the market and continue to grow on these profits. So someone said, what percentage of your portfolio should be allocated for cash? I think it depends on the phase of the market cycle. If Bitcoin is tanking down to, say, like the 200-week moving average, like let's say it's already at the 200-week moving average. Well, historically speaking, this is the time to purchase Bitcoin. So when that happens, it's not like I'm leaving a ton of cash on the sideline, because I'm taking advantage of that opportunity, right? I'm looking at it and saying, okay, this is historically among the best time to purchase Bitcoin. I don't want to leave too much money just sitting there, not doing anything. With that said, all the cash is in stable coins and it's earning interest. So this is important, because if you're holding cash, it's good to actually put it into something that is stable and can earn interest, so that when you go buy something with it, you have a little bit more than you otherwise would have. And sometimes these interest rates, if the market is fairly stagnant, can actually outpace the market. Now, if we're talking about, Bitcoin is holding the 20-week moving average as support, and then Ethereum starts moving, and all these coins start moving, it's certainly less. But I do accumulating more of a cash position than, say, if at Bitcoin we're at the 200-week moving average, just because you have to be ready for a drop at all times. I mean, if Bitcoin drops to 8,200 tomorrow and then drops to 7,100 next week, you want to take advantage of that. And I mean, again, some of you might not like that, because you want all of your money in the market, but I tend to take a different approach to it. I don't only invest in crypto. I also have investments in traditional markets. A lot of different markets besides, like index funds. You have precious metals, whatever it may be. If it's real estate, commodities, whatever it may be, crypto is just one thing. And the goal, right, is to get into markets at good times to get in, and get out at good times to get out. Who wants to sit through a bear market in crypto? No one wants to sit through that. It's much more comfortable to watch Bitcoin crash 80% when you don't have a stake in the game. If you have a stake in the game, it's absolutely miserable. So this is the idea. To grow your wealth in crypto, or whatever it may be. If it should. I mean, for me, it's a small percentage of my overall portfolio, because again, if Bitcoin crashes by 50%, I don't want my net worth to crash by 50%. So the idea, right, is you make the profits in crypto. Once the party's over in a few years, we haven't even confirmed that the bull market has started, as far as I'm concerned, until we hold the 20-week moving average. But at some point, the party will be over, and it'll be time to say, you know what, it's been a good run. maybe the years 2023, 2024, but it's time to take a backseat to crypto for a while. But that doesn't mean you want to stop growing your wealth. Then maybe it could be a good transition to equities or real estate or something else. Remember, you want to continue growing the wealth. You don't just want to sit stagnant after you make your returns. I mean, even if you're able to turn, say, let's say you turn 100K into $1 million, and then you sit comfortably, you think you've made it with $1 million. Well, at the end of the day, $1 million is it's a decent amount of money, but you want to continue growing, right? Because as we continue on and the Fed just keeps printing, $1 million is going to become worth less and less. So just don't get too emotionally tied to a specific number in your head. Just focus on continuing to grow your portfolio in whatever it may be. And right now, one of the main investment vehicles, not the only one, but one of the ones that I use to grow my wealth is in cryptocurrency. Because I recognize that where crypto currently is does have a lot of upside potential, especially with the coins that I cover. Also, give the video, guys, if you guys can, please give the video a like, so that maybe other people will see it. Yeah, so Jamil asked a good question. He says, this is such helpful discussion, but at times it feels overwhelming when I'm working with a portfolio size of less than 3,000. So, this is a good question, and I want to talk about this because let's say you find yourself with a portfolio of, say, $3,000. The same principles that apply if it were $30,000 or $300,000, they still apply when it's a lower amount. You just have to continue, you have to continue with that rational mindset of taking profits when you can so that you slowly increase your portfolio. Because if you think about it, if you're getting into Bitcoin now, and Bitcoin does go to 100K or 150K and then retraces back to 50K, you're going to have such a huge head start on the people getting in on the next market cycle that you're then going to appear like you're a much bigger person than they are, because if they're dollar cost averaging, say, $500 a month, and Bitcoin is $50,000, then they're getting 1/100th of a Bitcoin every month or something. Whereas if you're doing it now, you're getting you're getting a lot more. You're getting 5/100. So there's one of the ways to think about it is most people, and I don't want to use the word whale lightly, right? Like, what does a whale mean? But I think it's somewhat arbitrary, or it's somewhat relative to where you are. So like if you hold $3,000 in crypto, maybe if you were holding $30,000, you would feel like, okay, now I have enough money to really grow. But my argument is, if you stick to these principles, then you kind of become the whale throughout a market cycle. You become that person that you're kind of aiming for now. But if you get too greedy now, and you say, what, $3,000 isn't a lot of money, so I'm just going to go leverage trade it on something, and it's either going to go to zero or it's going to make me a millionaire. This is a good way to lose a lot of money, because not only do you might, of course you could get lucky, but you're gambling, right? If you want to go gamble, you don't need to use crypto to do that. There's plenty of other ways you can gamble. But if you stick to those principles of, say, what, I have $3,000, I want to turn it into, say, $30,000 over the next market cycle, I need to stick to these principles, because then in a few years, or whenever that time comes, I'm going to look back and know that I made those decisions. I made the decisions to slowly, to solidly grow my portfolio. Because remember, if you lose $3,000, let's just say you own one Bitcoin. Let's just make it simple. So let's say you have around $10,000 in crypto. Let's say you own one Bitcoin. If you go leverage trade that, or you FOMO it on say 20 different altcoins, and they don't work out, that's your opportunity cost again could be $100,000 if Bitcoin goes to $100,000. So you have to think about it. Okay, what could it be worth? And again, I'm not trying to say you shouldn't have other investments. I do own coins other than Bitcoin and Ethereum, and I also own obviously ADA and Link, as well as a few others. But you have to remember that you need to have these disciplines now, because I don't chasing these videos that say, like, 10 altcoins to 100x your portfolio this year, or, you know, such and such coin will make you a millionaire this year. Do you really think that most people get wealthy like following that kind of advice? Like, I think for the most part, no. I mean, of course, sometimes you could get lucky and see a nice 2x return, 3x return, maybe even more. But a lot of times, by the time these altcoins really get your attention, it's already getting to the point where it's kind of too late. And even now, if you go back and look at some of the coins that pumped recently, a lot of them are already seeing like 20 or 30% retracements. So just keep this in mind. Don't you know, your brain naturally wants to go after those short-term rewards, right? But this is also what can make it so that you also don't see any rewards throughout the market cycle. Do you want to be that guy in 2024 or 2023 and Bitcoin's like 130,000 and your family knows that you were in crypto back in 2020 and they think, oh man, this guy hasn't made because he was investing back then, but deep down you're sitting there thinking like, oh, I should not have just gambled it all in some random altcoin that was number 1437 or something on CoinMarketCap. You know, this is what you have to do. So I'm not saying you can't invest in small micro caps or in other altcoins, but if you do, just try to be responsible about it. Don't, you know, if there's a project you like, you know, all the power to you. You can go for it. But don't, you know, taking your entire investment and putting it into, say, a lot of different small caps just because you think, well, I don't have a lot of money, and this is the only way to turn it into a lot of money, is also another way to make sure that you never get a lot of money. So I hope that answers the question. Do we have any more questions? Let's see. I mean, yeah. I mean, in terms of investing in, you know, if you have 1,000 USD, you could put it in different coins. I mean, I honestly don't think about it in terms of absolutes. Like, this is the mistake a lot of people in crypto make. You think about the money you have in absolutes. Like, it's all about percentage. You know, if you have $1,000 and you see a 10x, it goes to 10 grand. If you have 10 grand, you see a 10x, it goes to 100 grand. But you know, you first need to make those slower steps to build up to that level, because if you get too impatient and rush into something, you know, this is not at least my approach. I'm not going to say that it doesn't work for some people. I'm sure it has worked for some people. There's a ton of altcoins, you know, that have seen good returns. But I'm just saying, like, you need to be resolute in your decisions there. All right, let's look. You know, if you just pull up CoinMarketCap again, I mean, you can see that, you know, that Bitcoin and Ethereum are having a relatively decent day. But again, this is business as usual. I have mentioned before, right, that coins like Litecoin and XRP don't really seem to make significant gains until Bitcoin gets to its previous all-time high, which is why I'm not really touching those right now. I'm not sure that I will, but if I did, market conditions would need to change a lot. I don't own Bitcoin Cash. I don't own Bitcoin SV. One coin someone asked to talk about is Tezos, XTZ. So actually, I do like this coin. I do have one video on it already. You can find it on the YouTube channel a few months ago. XTZ is, no, I'm not going to say, I mean, I do prefer ADA and Link to XTZ, but XTZ is one of those ones that, you know, I certainly am watching. And despite the fact that it, you know, it did have a pretty brutal 2018, it does seem to, you know, to be on a good path since 2019, since January of 2019. So you can see it does seem to be on a good path. And you know, again, XTZ is one of Tezos is one of those coins where it's, you know, it's, if we go back to CoinMarketCap, it's currently number 13, sitting at around $3. I would certainly expect it to overtake EOS at some point. I see EOS falling out. You know, Litecoin almost assuredly is going to be falling out of the top 10. Tezos, I think, has some room up. So certainly I'll be covering Tezos. My apologies for not covering it more, but I do like to keep the channel focused on just a few coins and not talk about 20 different coins or whatever the altcoin flavor of the month is. But Tezos is one of those ones that that I will cover off and on throughout the market cycle. So, do we have any more questions? All right. I don't really have a whole lot to cover. I mean, I just wanted to briefly touch base on those 4 coins, primarily Bitcoin, Ethereum, Link, and ADA. So, I mean, just let me know if you guys have any more questions, and if you do, I'll cover them. Otherwise, I'll just go ahead and sign off. Pretty Code says, even though you don't own Bitcoin Cash, can you do a BCH analysis one day for everyone dumb enough not to have sold BCH by now? Maybe, I don't know. I mean, one of the issues I think with BCH and a lot of these coins it's like a very niche thing, like the idea that they speculate, but at the end of the day, a stable coin, and many people don't want to hear it, but at the end of the day, a stable coin is most likely what is going to be used as peer-to-peer transactions in the future if we go the blockchain route. I mean, it's just a fact. So, I mean, you can speculate on Bitcoin Cash if you want to. But yeah, it's not something that I hold, and I'd have to think about whether it's even worth doing a video on it. Someone said, are you going to make a risk analysis chart for XTZ? Yes, I am, actually. And actually, if you join the premium list, I recently created risk levels for, let's see, we have Bitcoin, Ethereum, Link, ADA, Litecoin, and XRP. I should note that Litecoin and XRP are not coins that I hold, but I put them on there because I know a lot of you guys do hold them, even if you don't want to admit it. Because I do a lot of these like one-on-one conversations with people, and almost every single person has this like secret stash of XRP or something that they don't want to talk about, but they just want to know like what should they do with it. So that's on there. The next one, and by the way, each of those risk levels also comes with a Bitcoin risk level and an Ethereum risk level. So if you're trading it between Bitcoin or Ethereum, you can know what the risk level is. And we also have confidence levels for each risk metric. Like a coin like Tezos, XTZ, it hasn't even experienced a bull market. And because I only use historical data for that coin to create the risk metric for that coin, it's only as good as the data you feed into it. As they say with any model, garbage in, garbage out. If you don't include a bull market in the model, then how can it remotely predict what it could do during the bull market? So a risk metric for XTZ is not going to be nearly as useful as one for, say, Bitcoin or Ethereum. At least Chainlink and ADA saw really significant moves back in 2017 at the very end of it into early 2018. So at least they have something to go off of back then. But a coin like XTZ doesn't. So it'll probably be the next coin that I add to the risk chart, but with the caveat that, hey guys, this is what the risk level is, but you have to remember that if a bull market takes off and people really start speculating on XTZ, you have to consider that it's never experienced a bull market before, and the risk metric is based on historical volatility for that coin. Okay, you just have to remember that, and if you're interested in following along. Do check it out though. I think a lot of people do like the risk metric. Again, you can find it at my website, intothecryptoverse.com. And I'll put it in the chat again. And remember, one of the things I've spoken about here, you can pay with crypto for 6 or 12 months if you want and get a discount. But one of the things we talked about before, right, is if you're not sure if the premium list is something that would be useful to you, if you're like, I don't really know, I would rather you figure out, just check out the Telegram channel and ask people what they think. Like, get their opinion, say, you know what, this is where I am. I'm curious if it makes sense to join. Let me go ahead and tell you right now. If your DCA into the market every month is $100, then I would not recommend getting the premium list, because I don't want to take half of your monthly DCA. If this is not the case, then maybe it'd be useful. But if it's a lot lower, then I don't want to significantly cut into your projected ROI. I only, if it's a smaller percentage, then it would make sense. But just so you guys are aware, if you have a small amount, you almost would just be better just putting it into the market and then just holding it, rather than, say, dishing out 50% of your monthly DCA to a subscription. This is just the cold hard truth. So do take that into consideration. But if you do hold more and you're really looking to expand and learn about how the data can inform your decisions, then please do check it out. So someone said, with the next Bitcoin bubble, will all the liquidity of the alts go into Bitcoin? So rest assured that Bitcoin will likely make a move at some point to 20K, probably maybe in 2021, maybe late 2021, to a sustainable 20K. And at that time, a lot of altcoins will probably sit and watch. And then you might see it flood back into Bitcoin. Bitcoin goes on a run, and some of it floods back into the altcoins, and then the market will crash. Well, maybe not if it's just at its previous all-time high, but if it's going to, say, 100K, it's going to be crazy in the altcoin market too at some point after it makes that run. And then you just have to be smart and don't get too greedy. This is all I can tell you. If you get too greedy, then the amount of patience you had during the market cycle is completely for nothing, because you're just gonna go take all your profits and you're just gonna watch them dwindle away as you speculate on every single altcoin that's coming out, making a WordPress site and saying that you should buy that coin. So just stay focused, try to create a better life for you and your family. Don't worry, don't chase these things that people make seem like are so easy to chase. This is my advice, not financial advice. This is my advice. So someone said, do you take the news about projects into your analysis? So that's a good question. In general, no, but sometimes I think it can be useful, like noting, if there's certain really big milestones coming up, I think it can be useful. But if you're talking about such and such coin, or some miners or whatever it may be got shut down in some country, I don't really consider this, because I think in a bull market people just ignore the bad news, and in a bear market people just ignore the good news. It's just like whatever the news is, if it's bad in a bear market, things will, it's just kind of par for the course. And if it's a good news in the bull market, it's just par for the course. And then people just ignore whatever is opposite of the general market sentiment. So I don't typically take the news into account. But I mean, that's the rule. Obviously, there are exceptions to the rule. I mean, there might be a few times where if a coin is up significantly and then there's a huge event, then I might just go ahead and take profits, at that time when I know there's a lot of eyeballs on the market, there's a lot of money pouring into the market. When there's a lot of liquidity and the price is up, this is a good time to start DCAing out, because liquidity is a thing. Right? I mean, if you're trading a lot of these smaller cap coins, the spread can really get you. So yeah. So someone said, what's a realistic target for ADA in the next market cycle? I mean, picking arbitrary numbers is hard. Certainly the first goal, right, is to get to, the first goal would not be to get to the previous all-time high, but in terms of, say, a speculative bubble, the first goal would just be to get to ADA's previous all-time high of around $1.30. If we get to that and Bitcoin is still, doing well, then yeah, I can go up another few X. But I don't, let's put it this way. If ADA were to make it to, $10 to $15, I would most likely be mostly out of the market by that point. And I would wish the rest of you a good mission. I would wish you nothing but the best. But at some point, you just have to be happy with what you have and then take the profits. Because if you get too greedy, literally, if something like that were to happen, you could watch it crash like 50% in a day. So again, you have to be careful about about getting these specific numbers in your head and thinking, okay, I'll sell when it gets to that point. I knew a number of people in the last market cycle that were waiting for their portfolios to reach like $1 million before they cashed out, and then it never quite reached it, and then it crashed. Okay, so don't get too attached to exact numbers. Just take the market as it comes and react to it accordingly. This is all I can say. So someone said, do you think the rewards could affect the run of ADA in the short term? It's my experience. So some of these rewards I think are great, and I think will help lead to the increased valuation of ADA. But at the end of the day, if ADA goes up 10x, I can assure you that some interest rate on staking is not going to stop me from taking profits. It's just not. So please take this into consideration. You have to think that just because there's a small incentive to hold, well, if the price drops by 70% or something, is it really worth that extra percentage that you're holding and that you're getting in interest? Right now, probably the answer is yes. If ADA goes up 10x, it starts to become questionable in the short term. If this happens, say in the short term, if it's more of a slower grind up, that's a different thing. But if it's like a short term speculative bubble where it pops up and then everyone thinks it has to keep going up forever, this is when you have to start thinking, okay, maybe it's time to get out. Someone said link end of year speculation. Man, I don't know about end of year. I mean, it all depends on what Bitcoin's doing. But if this trend continues, then it's not that hard to imagine Link getting to to $10 or something or $15. I mean, I'm not going to throw out a number like $50 because I don't think it's going to happen by the end of the year. But I mean, this is more of a Link does more of a slower grind up against Bitcoin, which is ultimately what we want to keep seeing. You just want to keep growing the wealth. Yeah. So Timor83 had a good question. This is actually exactly what I do. So he says, what do you think about trailing stop losses during the fast bull runs instead of DCAing out? This is already what I do. I dynamically DCA. So if the risk level gets to say 0.7 out of on a scale from 0 to 1, then let's say it goes to 0.75, maybe I'll set a stop loss. It could be a trailing stop loss, or it could be a stop loss at just a lower risk level. And if the price monotonically increases, then I just incrementally increase that stop loss. Okay, this is what you should do. Just taking the profits at a certain number is kind of inefficient, but by putting, say, a stop loss in, it ensures that you take profits at that risk level while giving you the flexibility to increase that stop loss if the risk continues to go up. I hope that makes sense. All right, do we have any more questions, guys? I'm probably gonna sign off here soon. I will remind you guys one more time that you guys should join the Telegram chat. The risk level is generalizable to a trading view indicator, and I'm probably gonna make it into a trading view indicator, but I'm just really slow about doing that kind of stuff, so I haven't done it yet. Also, I do see a lot of people talking about some coins that I don't tend to talk about. I do have another Telegram channel. There's Into the Cryptoverse, but also there's Into the Cryptocosm. And I'm not as active in that chat, but if you want to talk about all these different coins, these microcaps, just go join that chat. And there's there's a few hundred people in there. They're always talking about these microcaps that are moving. So if you just have this itch that you need to talk about microcaps, just go check out that chat, because this is where you can kind of get that itch scratched if you have it. All right, guys, do we have any more questions? If not, I think I'll just go ahead and sign off. I think this was useful. I hope it was useful to you guys. Just remember, stay focused on the long term. it's just business as usual. Like, just keep an eye out on Bitcoin. Make sure it's staying above the 20-week moving average. And actually, I should probably switch to the weekly. But yeah, and the 20-week moving average is currently 82.68. So as long as we're above that, I think it's still a good times ahead. If we hold the 20-week, then things could start to get crazy. But I don't know when that'll happen. So that'll wrap it up for the video. Remember, if you guys like the content, please check out the premium list. You can ask questions about it in the Telegram chat, and give the video a thumbs up if you like the content. I am trying to grow the channel. I am still relatively small, but I would like more people to see a little bit more of a level-headed approach rather than just saying that every coin's going to go up 100x this year. So please share the channel if you like the content. That'll wrap it up, guys. So someone said, do you own the equations that create the risk graph? Yeah, so I made the equation. I just haven't published them right now. But yeah, they're not, the risk equations, they're all the same. The only one that's different is the one for Bitcoin. The risk equation for Bitcoin takes into account diminishing returns and reduced and lengthening cycles, so that it continues to predict those higher risk bands even if the volatility is reducing. So this is the point. So the Bitcoin risk metric is different than the risk metrics that I use for all other coins. All right. Someone said, "What do you do outside of crypto?" So I have a PhD in nuclear engineering, and I currently work as a postdoc in computational material science. So Octavian, I think I just answered your question. Yeah, I mean, if the stock market crashes, I do think this could affect Bitcoin in the short term. And if the stock market crashes, there's probably an increased chance that Bitcoin does not hold the 20-week moving average and we kick the can down the road. All right, guys. I think that'll wrap it up for the video. I hope you guys enjoyed it. Let me know what you guys think in the comments below. And remember, give the video a thumbs up if you like it, and I'll talk to you next time. Bye.